Okay, welcome back everyone to another exciting episode of Marketonmic, and I'm your girl Natasha, and I have with me right here.
All right, thank you everyone. It's actually Daniel, and it's good to be back to another episode of Market on Mic. And as we all know, that Market on Mic is a show that helps traders out there, or you're looking to start out your trading or investment journey. Market on Mic is where you should be, and our sole purpose just focuses on helping you to sharpen your mindset, strategies to beat the market in the world of trading, and with the sole purpose of making money at the end of the day. Now, if you've been with us for a while, you know that we never shy away from the real conversations. We're always straight to the point. And in our last episode, and if you haven't watched or listened to our last episode, you should actually go back to listen to it. And we came up with, or we had a very interesting episode. We did a chat with the big debate, price action versus indicators. All right, so you should actually go back, watch or listen to the podcast or listen to that particular episode, and definitely I'm sure you're going to pick up one or two important things there.
So sometimes it's not about which is better, just like what Daniel said. Last week we actually spoke about price action versus indicators, and that is one of the biggest discussion that we traders have. So just like I said, it's about how we used to build confidence and consistency in your trade. And that is why this week, guys, we have actually brought in a heavy hitter. This is a trader whose experience speaks for itself. This is somebody I personally have learned from, someone who has been in the trenches and he knows how to read the chart like a storybook, right? So please welcome to the show, Sam Bang.
Yeah. Hey, Sambanks, it's good to have you, bud. It's good to have you to this particular episode. And Sambanks is actually a seasoned trader, although he has been in the trenches. But he's a seasoned trader, a market technician. He's actually one with a rare mind, and he has been able to successfully find the balance between intuition and tools, which is bringing a balance to his trading style. Sambanks, it's so good to have you here.
Thank you so much. It's so good to be here. And I want people to understand the fact that I've been in the trenches. And I think that's why I'm very happy with something like this, because I believe that information is the most important thing you can have. And that's the difference between where I was and where I am now. It's just information. So yes, I'm happy to be here.
Yes, we're so glad to have you here, Sam Banks. And just before we get deep into today's discussion, let's just do a quick recap for our listeners. So last episode, we explored the difference between price action, as we spoke about raw market data, candlestick patterns, and reading structures, versus the indicators like the RSI, that's the Relative Strength Index, MACD, moving averages, which help interpret that price in a more calculated way. So if you're just tuning in for the first time, please go listen to the previous episode on price action versus indicator and every other single one that you've actually missed. So we talked about how some traders live by one or the other, but is it really either or decision? That is what we're actually uncovering today.
Exactly. So, like Natasha rightly said, is it really an either or decision? All right. And I'm sure that is one of the things Sambanks is actually going to be helping us to straighten for this particular episode. All right. So, Sambanks, we have a couple of things we'd love to maybe dig into your experience. And when we talk about price action, I'm sure you're aware of price action and indicator. Has always been a particular debate in the trading community. Which one is better? Which one should we use? Which one should we use? And the likes. All right. So in price action and indicators, which one would you rather say is king?
First of all, I don't even think this is a debate. I think my own opinion would be price action. I really believe that price action is king. I have tried both at different times individually, and I've tried them together, and price action is king for me.
All right, that's pretty interesting. And if you look at especially new traders that are coming on board and probably they want to start out their journey, and when we look at starting out, probably analyzing charts and the likes. Now, if you to look at it, what's the starting point? Do you start from price action? Do you start from indicators? And how do you bring both sides into play to probably bring the balance?
Very good question. I spent a very long time. I learned trading the wrong way. Okay, I'll say that I learned trading the wrong way, and chief of that was because I was introduced to indicators. I had so much indicators on my chart that I could barely see the candles. I had over 7 different periods of just moving average. And what charts? Or less. Then I had the Kinashi on that same chart. I had RSI on that same chart. I had, so at every point in time, there was always a condition. Oh, I'm going to buy once it breaks above this. Now it breaks above, and I'm like, oh, no. now it's above, but RSI is overbought. But I can't buy now. So I think that at the end of the day, you should begin with understanding the market. The truth is, I had to unlearn and relearn, and we started with a naked chart. I think that what your starting point should be is your chart. You understand? It should be about understanding how naked price moves. What is a trend? What will you say an uptrend is? What are the characteristics of an uptrend? What is a retracement? What is a reversal? Okay, what is a range? When you start that, I think that it's every other thing will begin to fall into place once your education of the market begins with that market structure.
Oh, that's actually good for every beginner, especially beginners. For me to learn price action, I have to stick to my screen. And when you hear a lot of traders these days, I'm not ready to do all of that stress, right? I just want to know when I'm supposed to buy, when I'm supposed to sell. So if a new trader was actually listening right now, how important would you want them to know that learning price action is actually the main deal?
Yeah, I think it's a choice of, do you want to make money? Because do you want to go? Why go into something if you're not going to commit fully to it? I'm saying this because we talked about a little bit of what we mean by trenches. For those who I lost so much. I lost a part of my wedding money. Oh, please. I was already money to trade with, and I just thank God. I'm sure when she listens to this podcast now, to finally find out why we didn't talk. But at the end of the day, if you don't spend time to understand market structure and you do some of these things, indicators, maybe you get copy trading, maybe you do an investment, whatever, you're going to lose so much, and you're going to come back to learn price action. Exactly. So the funny thing is this: you spend time to learn price action, and with that, because of that knowledge, you can now go into other aspects. You can now use indicators, you can use copy, you can use robots, because that knowledge you now have, nobody can take away from you. So I'd rather dedicate my time into learning it and then deciding what to do with my time later, than going into trading and saying I don't have the time, and then finding the time later when I start losing. Exactly.
That's pretty good in there. A lot of value been really there. And thank you so much for that, Sam Banks. Now let's go a little bit further. Okay. Right now, have there been times, because you said that you started from price action, so was there a particular time when you had to bring in indicators to your job?
Well, I started with indicators, right? My trading journey started with indicators, right? Because it was easy. Except when price goes above this indicator, buy, price goes below, right? But yes, in terms of contradiction, I've been many times. My problem is that indicators usually give such alert or such confirmation late. Okay,
the lag.
Exactly, lagging indicators, and most of them are. You would hate your indicators when the market is range. They give you so many signals within an hour. You're buying and selling, and no one. Do you know what it means to enter buy and sell, buy? I don't make profit on any. Yeah, so there are many times when there's been contradiction, and my go-to move has always been to check price action. Okay, first of all, I want to be trading along with the trend. Okay, there are many trend indicators, but no trend indicators can actually let you know when the trend begins. Most of those trend indicators will let you know 2 days after the market has begun its trend. So you have late entries. With late entries, you have to hold drawdowns for so long before it comes to your profit. Now you've had drawdown of over 6% of your capital. So when you make a profit of $30, you close it because you're relieved when you could have entered much earlier. So at times of contradiction like that, my final decision is based on price action. I'll be more convenient if I'm trading along with the trend, and only price action helps me secure that.
Guys, remember earlier in our episode we said this: the trend is your content. Very
true. Very true.
You want to be able to hold on to that, irrespective of the indicators that you're going to be applying. We've been able to see that they can also be late. So you want to be early to the party so that you're actually making really good money. Thank you for that one, Sam.
Oh, thank you very much, Sam Banks. I think let's go a little bit further. Sure. Now, you said you started from indicators and it was quite messy before you found the light. By that. So now, if there are traders out there that are starting from that very point of indicators where there's so much, they are struggling, how do you think they can? Because starting with something may be difficult, they won't change from that thing, going into something else. So how are you able to transition into, something that really works for you? And how do you think someone else can also take that?
Trading for me is just like life. You need to, at the end of the day, you don't have any choice. When something is not working for you, you need to change.
Yeah.
So this is what I usually do when it comes to working with tools and knowledge of market. I first of all want to learn it the manual way. I want to understand it. And that means that when I understand it, I know how best to use those tools. I still use indicators sometimes, but I might find out that if I have decided what the trend of the market is, I use indicators to maybe decide when to enter, retracement levels, and all that. I have the final say. Because of the knowledge of this. So if you're using a tool, at the point where your tools, no matter what they are, no matter how paid for they are, no matter how expensive they are, they were designed by someone. At the point where they begin to go against price action, at the point where they begin to go into even something as basic as fundamentals going on in the market, right? I make sure that price action comes first. So once my indicator is going against price action, I do not accept it. Also understanding multi-time frame analysis, because where you use your indicator, people have some indicators work better on time frames than others. But price action will always work across various time frames. So I would look at from the highest time frame to the lowest time frame. I have a knowledge of price action, right? That is where my line is. Nothing goes against your indicator is good as long as it works in line with price action. Once it works against it, that's not for me.
All right, then that's actually very, very clear analogy, and it actually speaks to something many traders miss. All right, your tools should actually complement and not confuse. If you're using price action, if you're using indicators, or you're using both price action and indicators, your indicators should complement price action and not confuse you.
Yes, and if you're a scalper, you might need fast confirmation, quick reactions using price zones and fast indicators. If you're a swing trader, you probably rely more on a clean daily or 4-hour setup confirmed by structures and momentum. The real magic is in knowing what you need to stay consistent.
Yeah, that's very true. You actually need to know, and Natasha rightly said, understanding the kind of trader you are helps you to better filter what kind of indicator you can actually even make use of. And that's pretty interesting, right? So if we actually look at probably some mistakes that traders make, just for our listeners out there, to help some of our listeners avoid some messing they do so that they're not really confused. What are some mistakes traders make when trying to use both price action and indicators? Could you just help us?
Especially when it conflicts. I think where the mistake usually comes in is when the reliance is more on indicator than on price action. That's where the mistake comes in, because price action helps you to have an entry plan, helps you with also an exit in case the trade is good or bad. So if your reliance, it's not really a very complicated thing. It's not complex. You just need to make sure that it's price action first before indicators. Now, a lot of indicators out there, free, paid for. I have some that personally I am also designing. Because that's the next level. Next level in trading is tech, right? Run programs and all that. But at the end of the day, trading is, I'm going to say it like this. If there was an easy way about it, if there was one tool that made it perfect and all that, come on now, I would not be here. You understand? We will not be here. The only thing we'll be doing, even on Marketonmic, will be, hey guys, get this. I need people to understand that you have to work for it. You have to work for it. You have to have that knowledge. And then when you have that, then you can do whatever tools you do. As I talked about when I started, that my chart was all indicators. Right now, there's nothing there. It's just candlesticks, right? But so at the end of the day, you want to achieve results. When you achieve results, you need to make sure that your reliance is first on price action. So me, that's what I think, by the way. Your reliance is on price action, and then any other thing comes next.
All right, Tim Banks, thank you very much. That was pretty concise and clear enough. And to bring a little, maybe for our listeners out there, to probably bring it all together. So basically, don't use too many indicators. If not, your chart becomes like a rainbow.
Actually.
So basically, if you're looking to take a trade, your price action should actually come first. So taking trades only because your indicator says so without structure, it could just bring noise alone. And also, like Samban said and Natasha confirmed, the trend is your friend till the end. So don't ignore the trend, guys. Even the best signal fails in the wrong context. So don't just put it in the context of indicators alone, but bring together your price action, which would give you the best environment to make better trading decisions.
Sam Banks, you have actually dropped so many practical gems today.
Definitely.
And I hope that we are all taking notes. Remember, we're supposed to have a trading journal. So I'm sure we're all taking notes, getting to understand. And I know that, yes, we don't want to look at the chart for so long, but he already said it. Price action is king. Right? So before you dive into your indicators, before you dive into your AIs, before you dive into whatever tool you've been advised to use, please try understanding your action. So for traders trying to find their groove, what's your best advice, Zambang?
First is Marketonmic. I'm saying, yeah, and it's true. Information is important. I learned most of what I learned when I started on YouTube. They told us to buy when candle was green. But so the information that is coming here is, I like that it is raw. I like that it's for traders. This is not marketing. This is not, there's one easy way about it. Just for people who really want to do something. Right? So, but I would say to them, invest in knowledge. It's important. Also understand there's a risk side to this. You need to beef up your mind. There is no other way to make it in this life than to take risks. You understand? So invest in knowledge and do not be impulsive. No matter the amount of moves the market is making today, it's going to make move tomorrow. Yeah. There's always that thing where, if I don't do it now, I would forever save and all that. So yeah, that's my advice. Knowledge, basically. It's very important.
Of course. You keep it simple first. You learn to read the chart. Your price is always first. Once you understand the story price is telling, indicator becomes a lot more helpful. But never use them blindly.
Yeah, you said it just perfect, Natasha. And to everyone listening out there, if you ever wondered whether you're to go full price action or to go full indicator, like Sam Banks he has helped us he has brought the answer, made it so concise and clear. You are to learn the language of price, know what the price is saying, know the story behind every price, and let the indicator more or less translate for you, help bring it down so that you understand when to actually execute your trade. So thanks again, Sam Banks, for joining us.
Thank you.
And to our listeners out there, thank you so much, guys, for tuning in. It was pretty great to have you on board. Don't forget to subscribe on YouTube and on Spotify. Follow us on Instagram, follow us on Twitter, Marketonmic. Drop a comment. If you have a question, put it down in the comment section and share this episode with someone who's stuck between indicators and price action. This is
Marketonmic.
Yeah, until then, guys, see you in the market. Bye.